A wonderful good morning here from the Prime XPT Trading Academy studio. I hope everybody's doing well and that you have survived and possibly profited of yesterday's slump of Bitcoin below 30,000 and the subsequent regaining of 30,000 on the way up again. My name is Dear Kartik. I have the pleasure of being your host today in this show, and I'm also the head of trading education here at Prime XPT. In the next 20 to 30, possibly a bit longer minutes, I want to talk with you today about two themes. I want to talk obviously about Bitcoin. So we are going to have a look on what happened yesterday, why did it happen, how was the smart way to behave there yesterday, and we are going to also look at how to deal with what happened this morning in the early trading session around 6 a.m. European time when Bitcoin recaptured the on the way up now resistance. Now it's a support again of 30,000 and how to possibly position us now in a market like this. We are going to later on also talk about or have a look on how the news sites out there reacted to this, and I think I have a very good example on how to interpret news like this and how to have this little grain of salt in the back of your head that keeps you skeptical about believing everything news sites are writing. If we still have time, then we are going to have a look at euro dollar. So we are going to divert a little bit away from cryptocurrencies, from Bitcoin, going to have a look at euro dollar, because I know a lot of you guys out there are also trading currency pairs, and righteous so. It is still the biggest market of the world with over 4 trillion US dollars of trading volume every day. I mean, imagine that. That's the GDP of Japan traded in one day. Crazy. And I want to introduce to you here the one factor that is the main driver of of currency pair rate fluctuations. Before we start, as always, guys, a little risk disclaimer. You know, we are all professionals here. Everything we do here is, from our understanding, very well researched. But please, by all means, this is not financial advice. You alone are responsible for your own trading decisions. So please take this as education and as our intent to focus you into the right direction for your trading decisions to, by the end of the day, make better informed trading decisions. If you are not doing so, please also follow us on Twitter at px_academy. And if you want to get in touch with us, you can either do so here with a live chat on either YouTube or Twitch, depending on what platform you joined us on today. And if you wish to go the classic way, of course, you can also write us an email at academy@primexpt.com. We will be answering every single email reaching us, and if we see something where we think this could be of interest to everybody out there, we will of course also cover your question here live in that crypto show. Great. Let's have a look first again, and I think it was not updated today. Let's have a quick look here. The Fear and Greed Index. Yeah, Fear and Greed Index. It was updated just now. It wasn't a couple of minutes earlier at 10. So very low, extreme fear right now in the cryptocurrency markets. And as I've said in the first two shows, the Fear and Greed Index is my go-to place always in the morning to look at how's the general sentiment at the moment for cryptocurrencies, especially for Bitcoin being the flagship. Sentiment of extreme fear, meaning that we are very likely to see the cryptocurrency markets reacting to bad news in a much more volatile way than to good news. So you're on average going to see the downswings being much more severe, much more volatile, much stronger, with a higher slope than the upswings. But on the other side, it also means that everybody is at the moment expecting lower prices. And you know how it is. The markets, not only cryptocurrency markets, all markets out there, they rarely care for what the majority of investors thinks out there. So it also could be midterm, long-term an indication of the sentiment going to the more positive again. And yeah, we are going to, before we look at the news, because the news is very one-sided in my opinion today. It's obviously all about the coverage of what happened yesterday in Bitcoin. Let's jump right into the chart here and have a look. And you remember this is an hourly chart, by the way. You remember yesterday in our show, if you were watching there again, also one thing I noted after we slumped down below the 30,000 was that I said, like, it's a bit weird, you know. I've been talking so long about, well, not so long, a couple of days now, we've been talking about that we are expecting a volatility squeeze in Bitcoin, either to the lower side, to the upper side, and that we want the Bollinger Bands here to divert like this to indicate there's a lot of momentum going on. So you would need a large red candle going outside here or a large green candle. And this really didn't happen. I mean, of course, it was quite severe, like going from 30,800 all the way down to 29,500. That's over $2,000 of movement, obviously. But as I said yesterday, what I was missing there really is like a continuation of it. So I would have expected for a volatility squeeze that this continues, that we attacked very, very soon the 29,000, which we, by the way, didn't. We didn't even come close. The low point yesterday was $300 above that. So that's, I mean, that's a percent higher than what we would have seen. So the volatility squeeze to the downside would have needed all the way down to under 29,000. And I said yesterday we would have traded this, or I personally would have traded this by placing stop sell orders here below 29,000 to make sure I'm getting into the market once the market really shows the squeeze under 29,000, but with enough dynamics, obviously. So that really didn't happen. And like I said that's a weird. So my game yesterday actually was that I thought that the 5-minute charts could have some nice potential in some trading setups. So it really was very simple. Because what you usually see in a state like this, now remember again, as I said, because we are in a sentiment of extreme fear. Yesterday we were, I think, at 19 in the fear and greed index, which also still is extreme fear. So I wanted to ensure that I only trade positions to the downside, so only short positions in Bitcoin. And what I really did here is I positioned myself here at 30,000 or slightly below 30,000. This was triggered 2 times. This was also triggered this morning, but of course I was stopped out when on the way up. And why did I do this? First of all, support levels, as 30,000 is, as almost all round numbers are, prices are always attracted by round numbers. Those always act a bit as a psychological resistance or support. So as we went down below the 30,000, the support here became a resistance. And from my understanding, what I wanted to do is, okay, what we usually see, or what we very often see, is when a price goes down under a support level, it will eventually pull up again 1 or 2 times until it goes completely down. And yesterday you could really wonderfully play this by not directly at 30,000, obviously. So you want to do this like $20, $30 below that by placing a short order there. So I was executed here once. It went It went down, 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 and gave me more than enough time to put my stop loss to break even and even take some winnings here. I mean, you could easily make like $200-300 on here on both trades. And I did the same. I did the same again this morning. So on the way up, I was again my short was again triggered here. But for all those positions, obviously, I had a stop loss also here above. And by the way, a good idea always is if you place a stop loss, your stop loss should be closer than your take profit. So if you on a trade like this want to earn, let's say, $300 per Bitcoin, you shouldn't be risking more than $200. So if you win the trade, you win more than you are willing to risk. This is one very important fundamental, at least when you're trading. Maybe not when you're scalping and you're riding the 5 minutes and 1 minute charts up and down, but if you're aiming at capturing like something like $2, $3, $4, $500 moves, you want to look for trades where you can lose less than you can win, because by that you put the amount, the percentage amount that you have to be right into your favor. So if I always earn 1.5% of what I'm risking, I actually can be correct below 50% of the time and still not lose money. And I mean, this is always the beginning of a trading career, to get to the state where you don't lose money. So in this case, 2 times right. 1 time I was stopped out here this morning. And now we have a completely new setup. And the setup now is that we are in the range here, somewhere between 30 and 31,000. This is kind of almost our old range, our old range. So what can we do now with this? First of all, I think a lot of market participants out there probably were very much surprised about those moves. Like when you read the news, I talked a lot yesterday also to clients, and everybody told me, okay, we're going to go lower now. It's just a matter of time until we go below 29,000, and then we are going all the way down to 22,000. And as I said yesterday, I was a bit skeptical about this, but I didn't want to rule it out. So I also had my stop sell, of course, placed here below 29,000, just to make sure, if I'm wrong about this, that I'm still going to be in the market. So you want to be prepared for all possibilities happening, obviously. But it didn't happen. So we kind of have a new situation that is not so different from what we saw yesterday. So somebody has been buying there, and one of the first things I did this morning, I wanted to look like, was that like a slow move actually, above the 30K again, or did this happen like all of a sudden? And it did. Look at this 5 minute candle, and we can go even to a lower time frame. So let's go really to the 1 minute candle there. And this is very interesting, because the move from 29,950 to 30,350 was all within a 1 minute. So this can mean two things. There was a big buyer saying like, okay, maybe having the same thoughts like I had, but executing in the opposite direction on it, saying like, okay, we didn't see more selling yesterday after we fell underneath the 30,000. So probably we are not going to see it today. So I'm going to buy it. And if I'm going to massively buy, of course, I'm driving the price up to, or what also could have been here, once we were above the 30,000 here, that a lot of stop loss orders, including mine, were triggered. So I was short. I needed to buy, obviously, to cover my position again. And this drives the price up then again too. So this is what you saw here. And this is not untypical, at least for Bitcoin. Once positions have been, once support or resistance has been broken. So my game plan for today is pretty much the same. I'm not so sure are we going to go higher. So what I could do and is I could try to see if I position myself short again. Remember, the sentiment is still negative. So my favorable trade would be somewhere around the area here of 31,000 to position myself short, maybe with the intention if we want to retest today the 30,000. But I mean, let's see first. We were not as high as I wished for that, but and then see what happens. Stop loss obviously here shortly above 31,000. Again, guys, this is my personal opinion. This would be my personal trade that I might be executing. Always depends on the setup then when we approach those levels, obviously. Please, please, please don't take this investment advice. There's only one person responsible for your own fate when it comes to trading and for your own success, and that is, of course, you as a person yourself. So please do your own research. All right. Yeah, let's, as a second stop here, look at news. And if you've been watching the two shows of that crypto show already, you might have noticed that after I look at this fear and greed index, I always like to look at news. And I'm using Google for this because it covers most of the news sources out there. And in comparison to how things were like 10, 15, 20 years ago, nowadays I find it quite hard to dig through the news and really find something that's worthwhile reading. And I knew already yesterday when we fell below the 30,000 that all the headlines out there, a large percentage of headlines out there is going to be something like, oh, Bitcoin fell below 30,000. It's now going down to 20 or 22 or 15, or we're all going to die and Bitcoin is doomed. Because this is what always happens in today's news. And you have to be very, very careful about this kind of journalism. And the mean thing about it, it doesn't happen only with like somewhat questionable news sources or news agencies. It also happens with the ones you would maybe consider normally being good, being neutral, especially, and doing proper journalism. But when I Googled for Bitcoin news this morning, I, for example, saw something like this: CNN saying something like Bitcoin falls below 30,000 as Delta variant of COVID fears spread globally. CNBC, watch these key levels for Bitcoin next after its break below 30,000, traders say. Yahoo Finance, what's next for Bitcoin after the break below 30,000, and so on and so forth. And especially this news from CNN, I think is very, very questionable. I normally would consider CNN to be a solid source for news, but what they are doing here is they are taking an event, Bitcoin falling below 30,000, where they know this is probably going to generate interest being clicks on this news, and they are combining it with, for whatever reason, with COVID right now. I don't see the connection of both, honestly speaking. And I don't see the connection, especially if I look at how the stock market was doing yesterday. So if there's a global fear of the Delta variant at the moment, which there is, I mean, there's no doubt about it. And there should be also. You should be cautious and a little bit afraid maybe also. But we saw rising stock markets yesterday. We had the S&P 500 plus 1.5%. We had the Dow Jones plus 1.6%. We had the DAX in Germany up yesterday, today further up. We had the Nikkei tonight up. So everything in the green there. And normally, if you see fear in the market, if you see people avoiding risk, you would see the stock markets falling down as well. And this didn't happen. So really, I don't know. For me, and this is sadly true for a lot of news you run across every day, this is clickbait. And I personally, I know somebody, not only one person, actually a couple of people that are working for news networks and that are doing online coverage of news. So they write all those articles, and you have to keep one thing in the back of your head. They are measured by the amounts of clicks the news headline generates, because amount of clicks for the news network means there's a higher chance somebody's going to uh, to click on an advertisement, generating revenue for the news site. So if you are a journalist working for CNN, you probably have to write something like, I don't know, 3 to 5, maybe more online articles every day, and your performance is going to be measured by the interaction of users. So now that I clicked on it, means for CNN, okay, I'm interested in that. And what they do is they're going to place advertisement here. So their revenue stream is coming from me clicking on this advertisement of buying an Acer laptop, which, by the way, I did a couple of weeks ago. So I'm still getting advertisement for that because I searched on Google for it. And so why am I telling you this? Because it's important not to fall for something. I mean, fall for something like this. You can, of course, still click on it. You can read the article, but you have to keep in the back of your mind, this is probably not going to be good, neutral journalism where a lot of effort went in researching facts. This is a design in a way that a lot of people click on it. And if you read through the article here, it's I mean, it's really it's BS. And pardon my English here, it is really, because they are connecting things that are just not connected, or at least not to an extent like they did. So when you are looking at news every day, and you should be doing this, always keep in the back of your head, is this news really relevant? Is it giving new information? Is it giving background information for me, or is it just something that's meant to generate clicks? And I get it. Of course, they need to generate revenue. Obviously, nobody is working for free or completely altruistic motives. But is this going to news like this going to help you with your trading? No. And that's why it's so important, and that's why it's one of my fundamentals, one of our fundamentals here at Prime XPT, to educate you in a way that you can come to conclusions by yourself. Good. I'm seeing I already talked again for 23 minutes. This is supposed to be a show that's half-hour long, but I tend to always tell a little bit more. But it doesn't really matter. So let's have a look at the second topic I wanted to talk about today, and this is the main factor influencing currency rates. So currency rate, obviously, on now I'm using euro US dollar as an example. So how many US dollars in this case you have to pay for €1 at the moment, 117.60 something. So, and a question I always get is like, okay, like, how's that influenced? Yeah, what are the main factors influencing if the currency rate long term or midterm goes up or down? And I want to show you here on the example of euro dollar the effect of interest rate differences between the USA and the Eurozone have on currency rate long term. And we're going to do so by looking at 2018. Now, as most of you probably know, there's a base rate, an interest rate base rate for in economy or country or a zone in the example of the Eurozone for that is determined by the central bank. So in Europe, this being the ECB, in the USA, this being the Fed. And we can see here the uh, the the base rate for the Eurozone has been since 2016 basically 0%. So basically money is free, if you want to exaggerate this like this. And if you compare this to the USA, I'm sorry, this is in German, It's a German statistical website I like to use, but just focus on the dates and numbers here. And what you can see here is the rate. What I want you to focus on, at least now, is you see here the rate, base rate in the USA, beginning of 2018, March 2018 was 1.75%, and then it went all the way up to 2.5% by the end of 2018. So we had rising interest rates in the USA in comparison to zero interest rates in the Eurozone. So, what does that mean, and why is that important for the development of the currency rate between the euro and the US dollar? As you can see here, from the beginning of 2018, so that was, let me get my brush so I can show you my awesome drawing skills. Just kidding. So from the beginning of 2018, where we were here somewhere between 124 and 125 and a half, until the end of 2018, further, actually, we went down in euro dollar. Euro dollar went down from let's say 25 to somewhere around here, 113, 114. So quite significant. That's like 11, 12 big figures that we went down. And the main driver of this were the interest rates. Why is that so? Because what people will do is they'll say, okay, at the moment for euro, I don't get any interest rates. So I'm going to exchange my euro into US dollars because remember, for the US dollars in 2018, I got something probably between 1.75 to 2.5% of interest. And this generates demand for the US dollar. A strong US dollar, demand for the US dollar means euro dollar is going down because you have to pay less US dollars per euro. Remember, this is our euro US dollars measured how many US dollars you have to pay per 1 euro. So because you saw the interest rate in the Eurozone being flat at 0%, but the US interest rate, I have to do like this, it's a bit weird on the camera sometimes, like this, rising slowly to 2.5%, this created demand for the US dollar. Yeah, people were willing to change their euro, sell their euro, and buy US dollar for them to get more interest. And if I say people here, I'm talking about large institutional investors, not everyday investors like you and me that only make up a very small percentage of the currency markets. I'm talking about corporations. I'm talking about pension funds, about banks, about hedge funds. So everybody, especially in terms of pension funds, that has to try to get the most interest rates for the money for the lowest risk. So typically something like a pension fund that has a couple of billions or tens of billions of US dollars or euros to put into the markets. What they cannot do, they cannot put like everything in stocks or cryptocurrencies. They always have a large portion of what they are doing there. Because I mean, by the end of the day, we're talking about pensions that have to be paid out every month to people, have to be put in secure assets, and secure assets being, for example, treasury bills of the EU, treasury bills of the US, and they are shifting their money. They were shifting their money from the from the EU, where they got something around zero interest rate, to the US, where they got on top something around 2.5 interest rate. And this is very well reflected here in the development of the exchange rate. Actually, it continued all the way down to 2020, despite the interest rate slowly going down. And well, so then of course COVID hit here, as you can see, last year, with euro dollar first going down, then going up like crazy, going down like crazy. This of course was a special situation. And what we had since then is, in terms of interest rates, since March last year, the US interest rate being around 0.25%, the EU one still being at 0%. Ignore here the deposit facility and margin lending facility for now. So there's not so much different anymore. Plus, a lot of uncertainty around here in terms of economical development. So you saw that somehow the currency rate found a balance again between the area of 120 or 117 and 123 up there. And why is that important? It's important for your everyday trading if you are trading currency pairs for two factors. You, by now, you probably know that I'm somebody that likes to follow trends in terms of trading. You most likely don't want to position yourself against the stream of money in currency pairs. The stream of money, meaning really those institutional investors that are responsible for a large part of this 4 trillion US dollars in turnover on the currency market every day. That are responsible for 60, 70, 80% sometimes of that flow. And as a retail investors, you don't want to stand in front of this wave of the money just because you think, no, it's going in the opposite direction now again. The interest rate in the US is higher than in the Eurozone, much higher, but I think euro dollar is going to 180. You're going to be rolled over. So you have to keep this for trading in the back of your mind. Another thing you have to keep in your mind here is also that you are exposed to interest rates payments you have to do and interest rate generation for you when you position yourself. Because if you, for example, trade one lot of euro dollar, and let's see if that works now. Okay, yeah, if I trade one lot euro US dollar, that means I do a position. If I do a long position, for example, long meaning a buy position, then it means I'm buy 100,000 euro and sell the equivalent in US dollar. So if at the rate at the moment of 117.67, I would sell 117,670 US dollars. So this is the operation that is taking place there already. And there's not money generated out of thin air. It's always an exchange taking place. So in my example here, if I buy euro dollar, one lot meaning 100,000 units, I'm buying 100,000 units euro, 100,000 euro, and I'm selling 170,670 US dollars for that. So the current rate where that may be at that moment. And for those 100,000 euro, I'm getting the EU interest rate or something a little bit lower than the EU interest rate because there are obviously third parties like your brokers involved that have to borrow the money for you and so on and so forth. So I have to borrow 100,000 euro and pay the interest for that. And I have to sell 117,600. I'm sorry. I have 100,000 euro on my account then because I bought them. So I'm getting interest rate for that. And I have a minus balance of 117,670 US dollars for which I have to pay interest. And of course, if we scroll back now to 2018, end of 2018, you see something like, okay, for my euros on my account, I'm getting 0%. Yeah, interest rate, maybe even lower than that, but let's stick to the 0 for now. But I have to pay at least 2.5% for the dollars I have as a minus balance now. I'm going to lose money every day. So you're going to pay 2.5% annual interest, at least, probably more than this, on your position every day. And this is what is called a swap. So I think this should be enough today. We are going to cover more on this, by the way, in our educational videos. But I think it's very important to keep this in the back of your mind because this is a very typical questions we hear here a lot that people ask, okay, what is the swap? Why do I have to pay interest for my currency pair positions? Why do I sometimes get interest? Yeah, how is that? That is not fair. Yeah, it is fair because money is not generated out of thin air. So if you trade, if you buy or sell, for example, euro dollar or any currency pair, keep in the back of your mind you're probably going to get interest for one currency pair. You're going to have to pay interest for the other one, and like the way it is in life, usually the amount or the rate of interest you have to pay for something you owe in terms of money is higher than what you get for having the money on in account. So keep this in the back of your head. This is important when you are planning to stay long in positions. So you might want to consider not trading against the interest rate of countries that have a very high interest rate. Look, for example, look up the interest rate in Turkey at the moment, or some South American countries where they have like 5, 7, 10 more percent of interest rate. It can be a very, very dangerous trade because your the profits you make from your positions in terms of exchange rate have to overcompensate the daily interest you have to pay. All right, difficult concept maybe for some people out there, but that's okay. Nonetheless, something you have to be aware of when trading currency pairs. So let's see what Bitcoin is going to do today. We are for sure going to return there tomorrow. And once again, if you're not following us yet on Twitter, do so by at px_academy. Get in touch with us also under academy@primexpt.com. And most important, guys, claim your 50% deposit bonus. Go to your account, to margin, to account, type your promo code Training Academy, all in capital letters, in here, and Academy. So, and get your 50% deposit bonus on all deposits until October this year. So a great way to generate some more margin for you to be more on the safe side of trading. Until then, we are going to see each other again tomorrow at 10 a.m. for the 4th episode of That Crypto Show. Until then, please, guys, keep safe. And I wish you the best of luck in your trading activity, not only today, but always. See you. Bye bye.